Good morning to all of you here in California. We are again here to talk about things that important for all of us. And today is one of my favorite topic, and that's why I'm gonna use some kind of PowerPoint so that I don't talk too, too much about it because I don't want to stay long. And I know you need your coffee, you need to go to your work, you need to exercise, and you need to do things that you love to do every day, especially dropping off all your children in school. Yeah, some of us are already back in school, and some of them are already full time in school. So let's get into it. So today we'll talk about life insurance itself. Okay, so we're gonna talk about that, and we're gonna explain why it's important. Most likely, you guys already have insurance, some kind of insurance in your life, and you're already using it to assist you with your things that you need to do for your life. And I'm just gonna emphasize things that maybe you don't know, or maybe you forget how it works. So likelihood, like I said, you already maybe have a health insurance, car insurance, life insurance, but do you ever know how it work? Why is important to maintain that? Why is it need to be done and need to be taken care of now and that rather than later? That's the things that we need to talk about. So essentially, when you buy insurance, you are buying protection against unexpected loss for you and for your family or for your business, or even, right? So actually, it doesn't matter if you're gonna use that coverage or not, but that's the way you do it so that you can protect yourself for unexpected losses. When you're buying insurance, you know you're gonna have a contract with the insurance company. Between you, you are called a policy holder. That's you, and the insurer is called the insurance is the insurance company that you contract with. And then the insurance will agree to pay the damage in the event that the policyholder suffer something that name in that policy. So that's the way they know that they are required to do that. And some of the most of the policyholder have some time limit in the event of that, and then that's going to be called policy term, as amount of time that they cover you on that damage, and which they will pay some of the damage for you and for your family. In return of the peace of mind, of course, you're gonna pay something, and that's called a premium. Okay, a premium usually is a month installment, but you can do that for annually, semi-annually. You can do that for lump sum too. It's depending on how you want to do it, and you agree with the company that you are contracted with. But usually, in my opinion, it's much rather to do the annually, or the same annually, or the lump sum, because again, this is about commitment, committing to the policy, committing to the policy that you are really gonna use it, or you're gonna really take advantage of the privilege that they giving to you. So basically, if you commit to the company that you're gonna stay with them for a long time, they will commit to you too that they not only gonna cover you, but they're gonna lower the monthly for that, because they see that you're committed to stay with them for a long time. Like I said, that's the main thing about it. For example, um, and then that premium is gonna be a lot of people paying the premium for that the company, so that they will eventually have some kind of pool. That pool is the one they took if something they need to be paying out. So there's a lot of things that um, uh, goes with that before you can be paid. But again, most of the policy have deductible. So deductible is the amount you pay first, and then when you pay that amount already and out of your pocket, then the company or the insurer or the company insurance company will pay the rest of it. So people will tell you ask sometimes me, why is it the company or the of the insurance is very happy or glad to do and pay for the damage. For example, let me give you an example. So, for example, you have auto policy and you have a 1,000 deductible. So when you get into a car crash and the car crash is totaling of 5,000, so you pay the 1,000 first, and then the rest, the 4,000 is going to be paid by the insurer. That's the way the deductible works, right? So why excuse me, the company or insurance company will do that? Just just imagine, you have a lot of people like you that is paying that deductible or that premium, the 1,000, no, whatever the premium is, paying the premium, collecting all that, and then they are betting that you're not gonna use the deductible. They have some kind of process that is called underwriting. That really job is uh, to know how likelihood you're gonna use the policy's benefits. So the work or the job of the underwriter is to assess that. Just for example, let's see, you are a smoker and have diabetic, right? And you bought a policy, and that policy see under underwriter will assess you. So that they will see, oh, what's the chances of this Ronald gonna have a problem or in the coming years, or they're gonna go get be in the hospital or gonna get sick. So usually, if they see that you are a little bit more have a chance to get sick and maybe use that in the future, the benefit, they might either um, charge you a little bit higher premium, or they might just um, not accept you at all in the insurance policy, because they see that it's very risky for them to do that. That's why they're not gonna allow you to be approved. So that's the way they do it, and that's the way they know if you have some kind of chances that you're gonna be using it or not. So basically, the higher the deductible, the lower your premium will be. The higher your premium, usually the lower your deductible. The um, lower the monthly payment may seem a good idea for you, but if something happen, sometimes if you're not paying your deductible, or you're not paying your premium on time, or you're not paying your premium semi-annual or annual. Sometimes they put some restriction there under the contract that you can only get certain benefit or something like that, or you might just return your premium or something like that. They don't really pay the whole benefit of your policy depending on the contract. That's why I saying here is, maybe if you're paying a higher premium, usually the lower your deductible is. Okay, so depending really in the contract between you and the insurance company. So what is a life insurance? I know many of you may be like, oh man, forget it. I don't want a life insurance. I don't want that. I don't need that. So maybe some of you are have the negative thought or negative uh, exposure about life insurance. Basically, if you have a family and you love them, you need a life insurance. That's the easy way to say it, right? But why is very important to have a life insurance? So basically, if something happened to you and you're the breadwinner, how they gonna replace all that income that you putting in if you cannot work? You know, I mean, sometimes you can see that maybe the government will assist you. Yes, they might assist you, but like right now, look how many people who file for unemployment. How many people now stuck right now? They don't know where their unemployment benefit, because a lot of people asking for it, right? And most of the time, some of the your benefit is getting took away from you by the criminals. It's sad, right? But this is for you. When you have your life insurance for yourself independently, you know, you have the contract straight to the company. So you have more control and how the money is spent, and how much money you will receive, because that's the contract between you and the company. Again, if you have some kind of uh, family that is still small, you have children still small, you need a life insurance. So let's dig into it. A term insurance is a term. So basically, it only lasts for certain amount of time, maybe 10 years, 20 years, 30 years, depending on what you and the insurance company open for you to cover you in that certain amount of time. So that's the way. Then when you die or when you cannot work, sometimes they have term insurance too. That when you cannot work, um, you will be covered. They will only cover you in a certain time, if that years. And then if you, for example, you only took 20 years, and after 20 years you didn't use it, you lose it basically. So you don't gonna use the benefit, and then you need to renew that as another term or a permanent. So what is a permanent insurance? Permanent insurance is, as you know, as you heard right now, it lasts for a long time, the lifetime sometimes too. There's a lot of kind of different kinds of life insurance, permanent insurance out there that you can choose to use. So that's the one. It's a little bit more expensive because it built up a cash value. So the cash value, you can use it in times of need. Sometimes when you have permanent insurance, you can withdraw, certain amount of that when you need it. And then if you accumulate and accumulate. That's the way you get your benefit when you, for example, retired, and then you're gonna have already some kind of extra income coming in, and that's gonna be a free for you. So that's the way the life insurance works. So a long-term insurance care insurance is retirement savings are not going to be enough for you to cover you in your retirement. So in 20 years, the cost to cover 3 years of senior care could exceed $300,000. And according to Medicare, estimated at least 70% of people over 65 will not have will need a care of services during their lifetime. So as a more possibility that you're gonna need it, right? In case you haven't heard yet, the cost of the expected to jump dramatically more than a double in the coming years. Just to give you an example, a private one bedroom in a assisted living facility in Virginia costs 47,880 in 2014, but will cost you 116,217 by the year 2020, year 40, 44, year for 2044. So that's the one. You can check out that one in some of the website. One of the website is GeneWork, www.genework.com, and you will see the estimated over there of how much gonna be you will cost you for long-term care insurance if you're gonna go to a facility or even a hospital. Hospital will only gonna take you for 90 days, and then they're gonna put you in a rehab on a long-term care facility. How about a long-term care disability insurance? An injury or illness can leave you without income for a long time. While one is for of today's 20-year-old has a chance of becoming disabled before they retire, only 29% of Americans own disability insurance. If you don't have disability insurance, or you have add a disability insurance in your through your work, expected to pay about between 1% to 3% of your gross salary annually. That's for the premium, and then most of the disability insurance pay out about 40-60% of your base salary. But keep in mind, if you are have an you're paying your premium of your of your disability long-term disability insurance for yourself, that's gonna be a tax free. But if you're paying your premium through uh, the employer, that's not gonna be a tax free for you. That's gonna be tax, you know, which means you have less money coming in. So that's the way I was saying to you earlier that it's much have more better to have any kind of your insurance, be independent to your work, not gonna be based on your work. Some people, taking all this deduct life insurance, long-term insurance, long-term disability insurance through their work, and they don't realize that some of that are free in the term of in turn it's gonna be free benefit for you, but if you're taking it from the employer, it's gonna be tax deductible. Tax gonna be tax. You're gonna be taxed on the amount you're taking away from that insurance, because it's not gonna be free for you. That's the thing about getting through your employer is not gonna be free if you take that from your employer. So again, that's the basically about insurance, or insurance 101. It's a lot of things, we can do. For example, our company can do for you. We can customize your insurance that will answer for your needs. We can structure that insurance better so that it will really answer your need just in case something happened. Sometimes people, when they said, "Oh, something happened," they only think about dying. No, we're talking about everything. Sometimes you got sick, maybe get sick only maybe for 6 months, maybe a year, or maybe for a lifetime, a long-term disability. There's a lot of things you need to uh, look up on the insurance side so that everybody, not only you can benefit on it, but your family too. And if you own a company of for a company, you need to have some kind of insurance in you and for your employee. There's a lot of things there that they saying, "Oh, this is gonna be too much paperwork." That's why we're here, Curious Finance. We can help you structure this better, or to answer your need. That's why you can reach out to us if you need some kind of insurance in your life and your business. Again, I just wanted to remind you, I don't know if I told you that yesterday, that we are helping small, small and mid-sized company to be more exposed in online. Most of the people right now is, when they need something, they always Google it, they always research it. And for us here in in Curious Finance, we are here to help you. We are here to assist you. That's why you need to follow us in Twitter, YouTube, Instagram, LinkedIn, and Facebook. If you can see all of that platform, we can show the public who you are as a company. So we are trying to see if we can interview. You can go to your place, show your place of business, and let us show the world how great is your company, right? And this is a free um, offering for you. I'm doing this by myself. I'm trying to do this for you, just to have you exposed to this all this online thing, right? It's hard. I know it's expensive to have some kind of online present, but we are here for you to help you. Again, you can uh, you can private message me in my handles of my YouTube channel, my Instagram, my LinkedIn, my Facebook. You can reach me over there, or you can visit our website. That's gonna be www.curiousfinance.co as our website. If you want to learn more about finance, we have a learning center there that you can browse to and find the things that will help you for your finance. Again, this is Ronald Flores from Curious Finance. I will see you tomorrow again. This to learn more about things about finance. Have a nice day.